We'll have a... So thank you very much for being here. This is our regular weekly session with customers, open to everyone. And we have so far 9 participants, and rest are joining. So let me read the disclaimer first. The material presented here is for educational learning purposes only and should not be taken as purchase or sell recommendations. Trading, investing in stocks and derivatives, futures, option, etc. is risky and could result in a substantial loss of invested capital. I'm not a registered financial advisor with FINRA or SEC. For any financial advice, please consult a registered financial advisor. Uh, by the way, I know most of the people they don't support futures trading and other, but this particular TR indicator, I've been using it for a long time on futures as well and very successfully. So if someone is interested in having a session just purely on the future contracts, we can have that separately. So moving on, today's session is first we will start with an analysis of the markets, what markets are doing, and how to trade in this particular difficult era of when the market is choppy. If we just quickly uh, review what market is doing, so both the main indexes which we follow, Nasdaq and S&P 500, they are both under pressure these days. Nasdaq especially being tech-heavy index and mostly relying upon semiconductors and chips. And semiconductors nowadays constitutes approximately somewhere between 40-45% of Nasdaq. In fact, maybe for Nasdaq it's higher, and S&P is around 40% or less. So any movement in semiconductor space, chips and so on, they will affect Nasdaq, especially Nasdaq 100, with a higher proportion compared to the S&P 500. And obviously Dow is more about 30 stocks, more stable and old-fashioned companies, stable businesses like Chevron, like United Health, and some big banks. So those are not very much open to any move in tech areas. And I would request everyone to mute their phone if they're not. Salman, your phone is not muted. Please mute it. I have done it for you probably. Anyway, so we should be aware of that what the broader market is doing rather than jumping on any opportunity of pullback because market could be very brutal. So we will go to the indexes first, but I would like to show you the historical seasonal patterns of both Nasdaq and S&P 500 before we jump ahead. So July has traditionally been a very good month. For Nasdaq, this is the month of July. And Nasdaq, as you can see from the period of 2010 to 2026, including current month's average, has given a 3.17% annualized average return for the month of July. But if you ignore 2026, we were already in this month, July, then almost all of the month, except for one or two exceptions here and there, like 24 was a negative month, 2014 was slightly negative, minus 0.87. But generally, July has been a very good month. And it has provided on average, like in 2022, it was 12.35, although market was coming out of a bear market. In fact, it was in a bear market at that time, but July was exceptional. So July has been a very strong month. And if you see overall here, starting from Jan to December, July has been the strongest month. So what is different this time? Why July is not performing in line with the previous history when it comes to Nasdaq? So the best month here for the last 2010 to 26 is 17 years of history. July has given an average of 3.17 for Nasdaq and 76.47 times or 76% approximately. July has ended positive, but this time is not going to end in positive, most likely, because it's already down with 2.65% so far. I'm talking about the broader Nasdaq index, which has, I think, around hundreds of stocks. I think more around 2,000, not hundreds. And while Nasdaq 100, if we go for Nasdaq 100 or maybe QQQ, let's take the Nasdaq 100 ETF QQQ. So the QQQ story is even, you see, minus 5.58%. So QQQ is even dragging behind the main Nasdaq. And QQQ means 100 Nasdaq major no, Nasdaq stock are mostly in tech space, especially like semiconductor chips, and with an exception of Apple. Apple is also there. So, and the average against of QQQ was 3.54%. So Nasdaq is minus 0.58%, which is something I would say concerning. Now, beyond that, then we are embarking upon a period which is traditionally weaker for stock market. August and September. September especially is the only month for last 17 years which has a negative average return. And August hardly positive 0.65. So we are now almost starting another period of weakness. And already the July, the strongest month, is not giving us good vibes, good signals. So what is happening? Apart from that, if you go to S&P 500, for example, and we review S&P 500 performance for the same period, more or less you will find the same pattern. S&P 500 for last many years, starting from 2010 to 2026, was 2.62% on average, but this year is minus 0.56%. Why? Because tech has a less weightage when it comes to S&P 500 compared to Nasdaq, especially Nasdaq 100. And 82.35% Nasdaq has, sorry, S&P 500 has ended green during the last 17 years. But this year, situation is different. It's so far is minus 0.56%, and it's likely that it will end somewhere in this range, 1 to minus 0.5 to minus 1.6%. But looking ahead, August and September again are two down months, negative month when it comes to S&P 500, in line with the broader expectations. So we are starting a weaker period ahead, already on a weaker ground. So that means that this correction, I would say, is almost a correction now. Although not technically correction, correction starts at 10%. But some of the stocks are already in bear market territory, means 20% from reduction from their maximum value. And we are already into that era. So it's likely that we will have this choppiness, this weak period ahead, and we have to change our strategies and pick stocks which are not in these weak groups or weak areas. Although in the long run, it always happens that the technology in semiconductors they come back. And why? Because mostly it's profit taking. But the one factor which markets hate, they are known as um, they are known as uncertainty. The one thing which market hate is uncertainty, and currently there is a lot of uncertainty. There is uncertainty about the geopolitics, about the Middle East political situation, expansion of war in different countries, its unrealized or unknown effects on world economy, energy supplies, too many unknown factors, and above all, our Trump's tweets. And beyond that, then we have midterm election coming in early November, and the midterm elections are also is a big question mark. Almost every fourth year, we have some issues around the midterm election. So these things are going to make it's a roller coaster ride for next 3 or 4 months, I would say, at least 2 to 3 months. Somehow we expect that it will it will definitely settle down and will come out of this phase. So this is the broader perspective I would like to give to you, that be careful out there when we make calls and we think, oh, okay, something is coming down, it's time to buy. Go ahead and buy. I see a lot of comments here and there. And I struggle with those things because people here, they see something coming down, they think that it has become attractive on the face of it, but market could be very brutal at time. So let's move on to some chart, for example. So this is SpaceX. The rocket is going in the reverse direction, but anyway, we will change to. Saw a few requests about a session on futures. Okay, we will look into it separately. So indexes, let's say we want to, this is our S&P 500. And for those of you who don't know, this is plotted on TradingView on my with my trend recognition indicator, which is my proprietary indicator. We like markets and stocks in this kind of a, when they start something like this is first stage triangle signal, this is second, and this is third. We want it's above the moving average, and in this phase, because this is where the momentum and power super cycle comes in market, and it can last at least for a while. But starting from the late May, in fact, I would say the market is in kind of a consolidation mode. And right now, S&P 500 is slightly above its 50-day moving average on EMA side. If you take a simple moving average, it's slightly below it, right at there. Now, if we like the indices to strengthen and stock market to perform, we would like this to be in this phase, not something like this. On the other hand, as I mentioned earlier, the S&P Nasdaq is even much weaker because of chips or semiconductors. So let's move to Nasdaq 100 and let's see the Nasdaq 100 index. And here the situation is, I would say, not very healthy. The reverse trend has been detected. It was trying to come back and forth between the bullish trend and the bearish trend. The bearish trend has been established. Now, still we are looking at this support here. The earlier lows around June 7 to 9, this level is very important. It's very close. In fact, on Friday, it tested this lows and then bounced back. So that particular bounce, it just could be a temporary bounce, number one, or it could be a double bottom and market can stabilize and go back. I don't know. Future is obviously unknown. But what history tells us, that ahead we can expect further weakness based on the historical factors and based on the uncertainties in on the global landscape. So August and September being negative months and others, and the midterm election around the corner, all these factors are telling us that probably this support will give way eventually. We could have another bounce, but every bounce will face a resistance on these lines, 20 days or 50 days moving average ahead. If the market moves past these bounces, establish something like a green zone on our TR indicator, then it will be okay. But even the first or second stage are continuously failing. One failure, second failure, the TR indicators bullish phase, then the first time again fail, the first time again. What is it is telling you? That market is trying to pull down and eventually either it will go up or down, but the path to least resistance is towards downside, unfortunately, not towards the upside. And that makes it difficult for us, people like us, who only trade long positions, not short positions, because of various reasons. Now, will it continue further go down? I don't know. Nobody knows. We have to take it day by day. But eventually, this 200 moving average will catch up. If this break down, market could find support and then bounce back. Market has the potential; it can do that. No wonder. So that is something this phase that what we need to focus on. We need to, rather than chasing those tech stocks which were hot just a while ago during this phase, April, May, and part of June. Rather than chasing those, would like to develop our watch list, number one, where the strength lies or where the relative strength lies. So, for example, some of the stocks are, even if they are coming down, they are not coming down in the manner like some hot stocks or previously hot stocks are coming down. They are performing relatively better. So we have to identify those, number one. Number two, we have to identify which industry groups and stocks are doing better under the current circumstances. Not everything is equal. So if you go to our investment ideas page, and this is our software. I have a new tab here, stock list and industry. If you go to industry groups, so it is has 97 Dow Jones industrial groups, and it is telling you which of the groups are right now, based on performance or based on their breadth, are performing relatively better. So, for example, I would like to see last month. You see which are the worst performer groups, minus 17 non-ferrous metals, things like copper, silver, gold mining. Gold has come down tremendously, minus 17.2%. Semiconductor, no wonder. This is what I was trying to say. Last 1 month, semiconductors or the chips, the backbone of Nasdaq 100, minus 15.4%. General mining, minus 13%. Heavy construction, minus 11.2%. But if you go back to 6 months, the 6 month return of semiconductor is still 47%. So that means between 1 month and 6 months, this group was performing much better, 47%. Right now it is under pressure. So it is giving back its gains. General mining, 4.1%. So which one are the best groups? Just sorted in descending order, press here. The best group has been in business training agencies, railroad, software. For the last 1 month, software as a group has not done bad. Some of the components, although last 6 months, software is minus 14%. So previously, software was under pressure, but it has come back from its bottom. And even the companies like Microsoft is doing better for the last 1 month, CrowdStrike, Fortinet. So we need to go with the leading stocks and leading group. Insurance brokers are doing well, delivery services. Transport is doing well, that means delivery services. Now, you want to know which are the stocks in this group, let's say delivery services. So we click on that, and here are the stocks in delivery services. 5 stocks, which is FedEx, UPS, EXPD. And if you want to find out more, then you have to just press this load data, and it will populate this information for you. So these stocks overall for last 1 to 6 months, they have been performing very well. And that's why the group itself was performing well. Like this AIT is 1 month 27%. FedEx 1 month is still negative down, but other UPS 12% up. So this is where the strength currently is lying. Delivery service is one of those. Financial sector is doing well. Insurance companies, financial administration, regional banking, mortgage finance. Do you see any tech stocks here except for maybe software? No. And software, remember, was a beaten downs. And biotech, right here, biotech. So we need to medical supplies and industrial REITs, healthcare providers. Again, healthcare. So the healthcare, financial, these areas are performing better currently under the current environment. And another measure is that you can check that how many of the stocks in these areas are above their 20-day moving averages. And in the mining sector, it's the weakest sector right now. None of the stock among these 6, 13, and 30 stocks, respectively, in these groups, are above their 20% moving average. But on the railroad side, like with a company like CSX, Insurance, 100% of the stocks are above their 20% moving averages. So these groups are doing, from the breadth point of view, much better. So that's how we can see which groups are under the surface are doing better and which are not doing better right now. Okay. So coming back to our chart here, so this was a Nasdaq was performing, and I also explained these seasonal tendencies as well, which gives you an idea where the market is heading towards. In other words, what we can continue to expect weakness among these areas, but what can happen every time the Nasdaq or S&P makes a new low, it will find some support, it will find some kind of bounce. Like Nasdaq on Friday bounced from this area to this area, approximately 400 points, and that's pretty normal. Only to find resistance ahead and then come down again. That's why this zigzag zigzag fashion is appearing. We don't like this thing. This choppiness, if you enter a position here, then tomorrow it will be negative. If you enter a position here, tomorrow it will be again working against you. So what to do and what not to do? The best is to protect your capital and is be patient. Either focus on those areas which are performing better, like insurance, banks, and railroad, transportation, healthcare, or if you are targeting these tech stocks, then it's better to be patient and find good entries at a later time. Now, why it is happening to tech stock? The natural question will come. So, for example, let's evaluate a few of the tech stocks. Now, those were, for example, any stock, MU or SM. If you take a look at MU, for example, now MU flashed two sell signals when it broke this line, 9 days, and then broke on the bounce, it broke again. And then right now we are here, something around 840, but we have come down from 1250. So if on a percentage side, if we measure how much is the percent MU came down, approximately came down 36% from the top. Imagine what would have happened to those people who were chasing MU at here. They are already down 30-35%. And that's why chasing stocks at high is not a good strategy. Question: can the software do industry level prediction so we can prepare and take action accordingly? Prediction: the software gives you an idea on this, and software can give you a seasonality of the industry levels as well. Like this is seasonality of SMH, which is chip semiconductor seasonality. From here, you can see the predictions that semiconductors on a whole have a negative August and September patterns. In other words, we can expect more weakness among these areas. This is market, this can do anything. But given the uncertainty going around in the world and the midterm election and already the weakness and the upcoming we can be it should be we should be very cautious when we're going long, especially in this kind of like this SMH is ETF for um, chips, semiconductor. Another one is SOX, SOXX. For software, there is an ETF IGV. Here, unfortunately, because those groups, which I have defined Dow Jones Group, those are not ETFs. So those are not traded on stock exchanges. So those are a bit different. ETF closely represent those industry groups. So here, for example, again, software groups, traditionally for last 5 years or 20 years, they software groups, it does not perform very well in these upcoming next 2 months. It performed well in July, which it is doing right now. So this is what that's how the market is tricky. You cannot predict accurately, otherwise everyone could become a millionaire by predicting what market is going to do in next couple of months or 3 or 4 months. That would have been very easy. So we can now you look at the weakness in which MU is doing. How do we detect and time to get out when the PPO come down below? PPO is another form of MACD, by the way, percent price oscillator, one of my favorite indicators. When it is in this fashion, it's hitting resistance on its average and then coming down until it resets, and I have just recently reset to zero. That means that this stock has a negative divergence. It may be still trying to go up because it was coming out of a long, big bullish phase, but it's time to give back some of its gains. Now, technically, it's cheap, MU. Its forward PE ratio as explained is very low. So hopefully it will find some. Now, if you notice here, it already give back, sorry, it already closed this gap on Friday around 800. This level is important for MU to hold. And if you are aggressive in nature, because by that time, if MU come down to this level, it will meet 200-day line here and already previous low here. Hopefully, it will find support because it cannot go down forever because there will be hunters, value hunters, value stock, they will come and try to give it support. But right now, it's a bit dangerous. The trend is not in our favor. There is more room to go downside. There is a least resistance towards downside, and overall market is expected to go down. as we saw it in our seasonality patterns. So it will definitely give away some more room. And if you watch MU, let's take a look at MU's weekly chart. MU typically, if I go to logarithmic scale, maybe that will better. Okay. When MU come down, so it comes down from 460 to 300. That was 35% or 33% here to here. Pullback. MU has a history of giving back 30 to 40% of its return. Like this was its return in July 2024. And this was its low point. Let's see how much was that. 60%. So MU gave back 60% of its value before finding a bottom. Correct? Now, is this going to happen? I don't think so. Previously, the situation was different. Right now, it could be different. But obviously, what I'm trying to emphasize is that there is more room for MU to go down before finding a permanent support, especially the given condition of market. So we need to be careful of what the group is doing and what the overall market is doing to find a good entry. Now, can MU, and everything is possible, correct? So can MU make a U-turn right away from here? Yes, it can. Why not? Thing is that unless and until, in my case, if I find this green zone starts, the first stage, or maybe second or third, this pattern emerge again, this pattern here or here, I will not take a long position in MU. Simple. That's me. Each one is different. If you say no, I don't care if MU comes down another 20%, but I would like to go long, that's fine. It's your decision. I'm not going to argue on that. And you could have made a better decision. I don't know. But because I have people who obviously take my signal and ask for suggestion, so I need to be more careful and conservative in my approach. Same goes with every major stocks in this space, every FANG plus stock. SanDisk. Now you see SanDisk changes its pattern when the 20-day and 5-day EMA started a negative slope. PPU started coming down, every attempt to go up, come down. That this was, if you were not out of SanDisk, that this was your chance when it gave this bar or it breached this line. Because whenever it now is trying to come up, it can. It will always find resistance up there. It come up, it's known as dead cat bounce. Now it's down here. Most likely it will come back to this place, 1250, and then again find some support. But I will argue that given the market uncertainties and given the global landscape and the midterm election, why not it can try to reach this point? Why not this 200-day line will eventually catch up? So I could be wrong again. What I'm saying is that I will not take a position unless I find this kind of pattern emerging. NTR indicator, first stage or second stage, and eventually this third stage. Now, will it be a late entry? Entry could be, but my own expectations and my own suggestion is that after such a long retreat or a base formation, then normally stocks struggle and they form something like this base. Once they come out of this phase and in this green zone, that's the point for entry on the long side. So we should be patient rather than giving back the money to market on abrupt and sudden jumps. Because I see comments like, "Hey, Sandy has come down. It's attractive. Go and buy it." Fine, it can go back. I appreciate that. I understand that. But overall, I would say that you need to understand the trends. And if it is the trend is not in your favor, don't
His
buy it.
his podcast on Sundays. Yeah.
Please put your phones on mute. I don't know who's someone has an iPhone. Uh, I have muted everyone, but I don't know why. Anyway, so I hope that explained the theory behind the this analysis that this is not the now. Late in the April, if you go to my software again in the weekly commentary and go to this weekly commentary on June, just 3 weeks ago, June 27th, And just go to the bullet point summary quickly. Now we saw that Apple was pulled back 4.7% on memory cost concern, bounced Friday at its support level. July historically strong for Apple. That's a very one line bullet. But if you, this is, no, not this one. If you download or view the complete PDF of this weekly commentary, then you will find more analysis of that we were saying that this pullback could provide another opportunity for Apple share at a better price, as July has been the best one for Apple during the last 10 years. And we think investor will provide support to Apple around these levels. And that was our opinion. Okay. Now let's see. That's a June 27th, correct? Ending on weekly commentary ending on June 27th. Okay. So let's see from June 27th onwards how Apple performed. Now, before that, going back again, let's take a look at seasonality and let's take a look at Apple. And this is 20 years for Apple. Okay. So, which one was the best month for Apple? 6.9% average in July, 90% of the time. It means 18 out of 20 times Apple gave you the positive return. The best month for Apple has always been July. Whether it was 20 years, whether it was 10 years or five, go to 5 years. And the 5 years is 6.6%, 100% of the time, 5 out of 5 years. Apple has given you a positive rate. Now, what's the worst one to be in the Apple? In general, September. Again, the weak period of the market coming ahead. That's here. So we were here in late July, and then we notice, given the market tendencies and Apple tendencies, because we were expecting market to perform better, which unfortunately it did not. We were here something around 29 July, 27 June here. So that was kind of a bold call. Normally, I don't give a bold call on with a PPO like here and the price is like down. But this was very close to it was bouncing off this support. And this is the our indicator plot supports. It was bouncing off these supports. And we knew that we have the month of July ahead, and there were some positive sentiments, and so we took a chance because it was Apple, and we know the history of the Apple. We know the products, its modes, its business, its revenue, and other things from our fundamental analysis. So we took a chance, and this Apple was around 280 at that time, and right now it's 333, more than $50 increase in a very stable company, especially given Apple is a big component of Nasdaq 100. At one time, it used to be the biggest one, especially when you see what Nasdaq is doing. Nasdaq is not supporting. Has come down on maybe 6% during the same period on average because of the weakness in other areas, chips and so. But Apple has been on the other side of the story. This is where we would like our trades to be after the first stage or in this green zone rather than in this orange zone. This is not where we would like to go uh, long. So thanks God, Apple has been a very successful entry. Now Apple was already our position. We just added it. Okay, fine. We say how much risk we were taking. We were here. Risk was here. Maybe around 5-6%. And how much we were targeting? 15% is already 5-15%, and that's better. So we have to analyze MU on daily. Now it depends upon what is your horizon. Are you there? For example, if the question is about MU, have to analyze on daily and weekly basis. Look, what I do whenever I make a weekly commentary in stock picks, I do not do it for 1 week we normally take a long-term view because there are all sort of people around us. And I don't want if we have 1 day of swing or 2 day of swing takes a negative impact and you say hey, it's not working in our favor, go out. Now we take a long-term view. And for the long-term view, we always move to weekly. Always take a look at the weekly. This is the Apple's weekly chart. And as you can see, Apple had a breakout from this zone right here in the March. It went up, then it came down and tested its top of this zone again. And then it went up again. So this is a long-term view of Apple. It always do that. Now, is it a good time to chase Apple at this point? No. Why? Although July is still left, Apple is still strong, and there is no doubt that Apple probably will go to 340, 350. But what is your risk, reward to risk? There is going to be a stop loss. Here, here, here is going to be a big stop loss. And the history tells us that when Apple makes a breakout, any breakout on this weekly chart, here it makes a breakout, it comes back. Here it makes a breakout, it comes back. Here it makes a breakout. This was the last high point, right? It makes a breakout, it came back. Here it makes a breakout, came back. Here it makes a breakout, came back. Now here is making another breakout. What is expected? It will come back during the month of August and September, most likely. This is when the investors in Apple take a backseat, they sell more share, they take some profit taking, only to let the stock settle down and find some support here, and then that will be another time to go long for Apple. Right now, there's a question on the Marvel. Look, all these chip stocks will be doing the same thing. Be it Marvel, be it MU, be it AMD. But by the way, AMD is doing better. Do I have Marvel here? No. Okay. So that's how we always take a look at the daily, weekly, and not in case of Apple and the long-term stock, even the monthly. Because we want to take a look at on the very long-term basis that what this stock is doing. And long term, we are confident that Apple is always, even though during the sharp corrections and the bear market, it comes down, but it picks up and it hardly goes back below the 50-month average ever. Take a look, 50-month average, January 19, 50-month average, 2nd May of 2016, 50-month average, 1st May of 2013, and then recession 2008-9, it came down, then it fought back. So it ever comes down to this level, that's the time to go long for Apple. Take extra risk because we know the history is on our side in this particular stock. So this is the hallmark or tendency of a long-term stock like Apple. So the question about I'll come to the Marvel. What I was trying to say, go back to the daily things. But that's only charting part of it. In a situation like any, we also take a look at its fundamentals. We go back to the software, analyze it to our software, and not only take, we also take a look at any overall, first of all, different strategies. Its conviction score is 6. Whether it is being accumulated by market or not, or distributing by market, whether it's a relative strength. Right now, Apple's relative strength is high. Why? Because Apple's is performing better, but the markets is not performing better. And what is the best month? As I said, July. What are the weakest months? September. And this EMA 10 signal, this is one of the best strategies with the best profit factor is in play. It gave last signal on 3rd of July. The only thing concerning was that Apple is a part of computer hardware group, and the computer hardware group actually is not doing very well compared to the overall market. But Apple is one exception. So, we take a look, also look, whenever we select, we always take a look at its fundamental. The fundamentally how sound is the company? Is it increasing its sales, its revenue, its gross margin, its return on equity year after year? This is like Apple's revenue. As you can see, from $400 billion just 1 year ago is right now $435 billion. So Apple is doing very well. And this is its 1 year performance. Even Apple, like a company like Apple, is 59% increase, and that's a very good increase. Although year-to-date basis is just 22%. So see, then we add that position to our weekly stock picks list. Okay. Now your question was on the Marvel. Any stock given in the tech space, especially in the chip space, will be doing the same thing. No exceptions. Why? Because the overall group, take a look at the overall semiconductor group, is doing this. The group is beaten down. It has come approximately from its recent tops. How much? 24%. This is the group performance. Some will be doing better, some will not be doing, some will be doing worse. So let's say what is happening in case of Marvel. I, this is Marvel. You see, same pattern. PPO coming down, breaking, breaching moving averages, and those also in volumes. Volume is not being shown here, but that is a separate chart. And so we are not going to go long unless it's something like Apple and it is at a very good support, which it is not. So people were saying that it will become $2 trillion company. Yes, it can become, no doubt. But this is what it is doing right now. It has come down. The group was down 24%. It has come down 46%. More than double the group, right?
Yeah,
23
that is
versus
good.
6%. So why should I go and take a long position on Marvel? I don't have extra money to give it back to the market. Simple as that. I would
Can't do that
like,
at home.
I would
Simple.
like that this trend emerges. This is where I can take aggressive risk. This point. First stage comes, I said, this is where my indicator, the bullish TR indicator, can help you in being on the right side of the trend rather than being on this, unless you are shorting Marvel, right? Which we do not suggest. Now, some of the companies are doing better and some other companies are not doing better. Like AMD is one company which is still above its 50-day moving average. It's still trying to resist this downtrend and is part of that growth. But does not mean that AMD, because PPO is continuously coming down, it may be a matter of time. If the broader market weakens further, another 5-10%, the AMD will break this thing and will come down to this level. Right now, AMD is doing better. So if we want to go long, we need to make some search and go to some other areas of the market which are doing better. Like I found Apple, right? Even Microsoft was doing, but in the biggest space, Amazon, for example, is an exception. Amazon, for example, has turned corners over here, and right now is as a good support. And PPO has come positive again. So if you are a risk lover, you're aggressive, and you know there's certain, then you can have a high reward to risk trade here. Amazon is 246. Maybe you can find this 235 or even 224 as your stop loss. That is around 4% or 8% max. That's it. But you could be targeting this level or even a breakout in Amazon later on, if not right now. But before that, you should always go back, check the seasonality patterns of the Amazon, check overall how its relative strength is doing, and whether the funds are investing in it or not. So funds right now they're neutral. They're not increasing, they're not very much decreasing. And relative strength is still fading while there's a mild accumulation. But there are two backtest strategies like this EMA 200 signal, which triggered on 29th of June, and this 30-week signal, which triggers on third, well, in fact, 3 and 30 weeks. So Amazon is finding from these three backtest strategies, Amazon has found some good signals. And after those signals, Amazon, not only this, it bounced back from here and here. What were those strategies? One was, for example, 30 period pullback, and 31 was crossing the 30 signal, and one was 200-day EMS. So, for example, this is a daily chart. So Amazon came here and crossed the 200-day. That's why that's the point that signal triggered. And as you can see, from that point, Amazon was 235. It went all the way to 255 before pulling back to 245. So the signals were helping us and telling us that there are some strategy behind the scene working and supporting Amazon. Question is, will Amazon resist the overall market trend if it is coming down or not? And that's the risk we have to take. So, for example, unfortunately, the month of August and September for the last 5 years are not very good months historically. Let's say maybe 15 or 20 years and see what Amazon does for last August and September. Worst months are September again, 1.5% on average. If you can live with these mediocre results like 1.8% average, 1.5% with a 60% of winning chance, then Amazon could be something which we can bet on, right? But it's not a very strong candidate. Okay? So that's how we need to line up or modify our strategy in line with the tendencies what are happening. So, for example, we took a look. We selected JB Hunt that was in delivery services and overall transport sector now. And you see that JB Hunt is giving you a different pattern. We probably undertook the JB Hunt here on this signal and that signal because we were thinking that although that it's turning corners and it's not resisting that pattern, it's not showing us this kind of a downward trend. But mine and JB Hunt is not a long-term stock. It's something which moves in tandem with overall transport sector. There were other good picks like GEV, and we mentioned that it will find support around 1,000 level, and it did. So that's how we pick up this thing. And we use these patterns, seasonality patterns, and our software and these chart patterns to find good supports. There was a question around not by here, but somebody was asking about NVIDIA. Now, NVIDIA, simple as that, is a part of a tech space. Tech space is weak, correct? Number one. So NVIDIA is not doing much for last maybe a year or so, at least from April this year, doing nothing. But one thing observable is that NVIDIA right now is not as weak as it used to be, number one. As the chip stock like MU, SNDK, Intel, and others like memory makers, that WDC, STX, they have all given back 30-40%. NVIDIA has not given that much. Now, this support is very much important for NVIDIA. It's 190, 200-day line, previous bottom, previous support. If NVIDIA breaks it and stay below it, then that we will close our even over the long term, because we don't know that NVIDIA will come down to 164 another. But we have been holding these NVIDIA positions for maybe years because it's a long term stock for us. So if someone, for example, it comes to this level again, so on a pullback, this is the level where you should go long or should add on, given the market is on your side. Unfortunately, market is not on our side during the next 2 months. So even if it finds some support here, probably it will continue to do this chopping action, up, down, stuck in this range for a while, unless the market overall comes. By market, I mean Nasdaq or S&P 500. It comes out of this pattern and forms something like this. This is the time that you will find the market stocks like Nvidia in the same kind of pattern, because these stocks drive the market and the market drives these stocks to be street. Okay. So that's pretty much it. I wanted to just go over to the market rather than going to the individual features of the software and uh, and uh, and some major stock, that why they are doing. For example, if you take a look at Intel, same pattern, semiconductor space. How much Intel has lost from its top? 37%. Now, would you like to go long here? Your call. I would say there is more room to come here, come down. Why not this break, this gap? Why not this 200-day line? What is stopping Intel? Especially when the market is not on our side, especially when the chip space and tech space, all the factors are telling us that this is not a right time to go long Intel unless we have this kind of pattern, this green pattern, and this thing appears coming out of a base, first stage or second or third stage, around the buy point. This is where we should go long, and that's where we gave an entry for around 49. I remember around 49. We're still holding back on that entry, but we already gave him back 35-66%. So strategy is when we were 49, it went back this and started doing this, then take profit out, at least reduce the position. Do not add position, reduce the position. Now maybe it's time to reduce the position because we are expecting that it will come down to this place unless you are there for a very long haul. Okay, now I open up for the questions. Anything else? I would like to keep it short today because we have football final, and I
Yeah,
know.
Sabri bhai, this is Fawad. I have one question. Last time in the midterm election 2022, the market was down from the top. Can you see the MNQ? How much was it down?
Sure, we can do whatever you want. You're talking about around the midterm election.
Yeah, midterm election 2022, I suppose. I
Let's
think.
take a very quickly at this seasonal pattern. So this is S&P, not Nasdaq. Last time it was 2024, correct? Minus 4.24 August, minus 9.34 September. Then in October, when there were less uncertainty, just before it came positive 8%. Okay, that's what now you want to see the Nasdaq. Nasdaq and S&P, they go along now. They cannot have large divergences. let's plot QQQ, Nasdaq 100. 2022, same, minus 10.54, minus 5.13, 4%. All right?
Oh, okay. Thank you. Thank you.
Mhm.
Brother Sarbi, salam alaikum. I have a question for you, please.
Yeah, Abade, Mohammed Abade?
Yes,
Well,
yes.
yeah, go ahead, please.
Stock Keel, Keel.
K
Uh,
E
El.
K E
L. L as in
L
Larry.
M.
L as in Larry.
1 second. Keel, yeah.
Yes.
You want to
Now
see that?
I'm new to the stock market. I'm still stubborn, still make a lot of mistakes. So I
Okay.
did catch a falling knife. I started with a position, I added more to average down, then I added more to average
That's
down.
the problem, rather. People start doing DCA, averaging down.
I know. I
Yeah.
know.
No, I understand. It happens to everybody, to me as well. And you're not an exception.
Give
That's
me give
that's
me
a
your
part of the
analysis.
learning process.
Yeah,
Issue
go ahead.
is that you should recognize these sell signals. When you see this red long bar breach of these moving averages, I don't have volume here, but you can always add volume in this particular layout. Volume. Where is volume? Not here. Anyway, maybe in another view. Now, here, when you see this, you should come down okay, because you're not married to the stock, okay? You should keep the stock when it is in this view. It's trying to go up. This moving averages should be on the upper, you should be on the in the upward slope. That's where you will get this green bar. Once the situation changes, you're below these moving averages and they have started sloping downward, you should get out of those stocks. Now, I don't know your entry price. I don't want to know the brother, as simple as that. But this, I will not look. If you probably added here, 5.7 something, you already 20-30% down here, correct?
I'm at 25% down, 20% down.
And that's a lot. Now,
Yes.
whether it will come back or not, I don't know. Then we have to go back. But number one, this is a small stock, three, $4 or $5. Those stocks, by definition, are very volatile in nature. Go back to our, so they generally they are not suitable for maybe a long-term investor or for people who do not want to take extra risk like 15. Normally, my suggestion is to 8 to 10% of it. You see, this is a strong sell zone. Conviction score is very low, zero point 0.7. You should avoid it. It has updated. And its ATR is 14%. What does this mean? Every day, for example, stock is $100. Every day, you should be expecting a move of $14 on average. Now, a stock is $5, sorry, $5, so you should be expecting a 70-cent move, 14% of $5, 70 cents. 70-cent move every day, and that's a lot. Now, it's your call. You need to make a decision. I will not suggest to move onwards. If it's not a big stock, I would rather wait for because when this situation will arrive, I don't know. Do we have chance to break it? Yes, we have. Like previously, look at the pattern. Whenever it comes down, this is 200 day. Normally, it finds support and comes back. If you can take extra chance, you can take. But I would rather try to reduce my position at least on this breach of this line. This is sell signal. This is a sell signal. This is a sell signal. Because whenever this PPO is moving like this, moving averages comes like this price and you find this kind of signal, that means the stock has a weakness showing up and the likelihood of coming down further is much higher than the likelihood of getting back to this position. Okay,
Okay, so just accept the loss. It'd be a better um, uh, um,
that a position you need to
risk management.
you need to weigh upon your total portfolio, how much you loss you can take. Maybe it's time to reduce your position. I don't know when is earning is around the corner, not very far away. What are his earning expectations? What are his seasonal? Then you have, and then it's still a negative earning. So there are quite a few things. There are quite a few things we need to take into account. How much loss you can take? You can wait for. That's something that every individual could have a different decision on based on his or her own parameters. I would always keep my position size within 1 to 5% of portfolio. For example, if I have $100,000, I will not invest more than $5,000 in any given stock at a point in time. Because any loss like this, 20 or 30%, can seriously dismantle my entire strategy, can seriously bust my account. And that is something I do not like to have. Okay?
Thank you.
You're welcome. All right. If no more question is about time, an hour, I know people would like to watch the football final. I think most of us are supporting Spain this time. I hope so. Anyway, at least I
You're
am.
absolutely right.
Yeah, yeah. For a number of.
Everybody for Spain.
Say again?
Everybody for Spain.
Everybody for Spain. Yeah, yeah. So wish you best of luck. Hope you like it. Give me your feedback. And just for those who are interested, I would like to share this. We have this complete package offering. Weekly commentaries is $9.99 a month or $110. Complete package $25 per month or $275. But this does not include a TR indicator. If you want TR indicator, which I was showing on TradingView, that is $60 with this and elite annual combo. Total every price is $395 for the whole year, but I'm giving you a discount of $60 if you scan this and put this TV special promotion code on that. That will make it $335. So hope you like the product, hope you like the analysis. And I think that's a timely analysis because we need to understand that what market is doing, and we should expect this choppiness in the days to come. Okay? So please, this is our YouTube channel. We have several recorded sessions, short videos, and different features of our software like alerts and others. And I would definitely like to remain in touch with my customers. Now, for my new customers, or especially for my elite annual combo, the software customer, whether monthly or annual, I am offering a free 1 hour coaching session, and I am sending, I've announced it. If you are interested in free 1 hour coaching session on especially the design around our software only, and I have already done it with one or two of my customers, then please send me an email and I will schedule one session with you. All right. Thank you very much. I appreciate everybody and hope to see you again.